Hello my fellow investment gurus, and welcome back to the channel and to a weekly update. A weekly update that shows us that everything is going fairly well at these times. The market are bouncing and so are our momentum strategies. First of all, if we are having a look at some of the things that really moves in the market, we can see that of course energy, oil is on the move. That is due to, mainly the crisis in Ukraine, of course. But as we can see here, there has been some fairly large drops. That is both on some rumors about some maybe progress in the peace negotiations between Ukraine and Russia, but it also due to some shutdowns in China, where they are really hitting the COVID-19 infested areas very hard with lockdowns, simply because they don't want another epidemic or pandemic to break out. But just mentioning that and seeing China shutting down is definitely putting a lid on the bull market in the oil. Now the uptrend is still there, and that has of course helped many of our oil stocks in the models. But now we are reallocating here on Friday, and I suspect that we will see a bit less energy coming up in the models here. But we'll have to wait and see what the algorithms are telling us. Now, looking at some of the other markets, we can see that it has been a very good time for the Nasdaq. A really good time here. We can see the S&P 500 is moving very nicely. And even the smaller stocks here in the ARK Invest, the small disruptive tech stocks, the growth stocks not making too much money, many of them, they have seen quite some nice gains here. A thing that has caught my eye and that I am a bit nervous about is the yields. Now, these are the yields, not the bond prices, but the yields on the bonds, meaning that when the bond prices are going down, the yield is going up. And what we can see here is that down from the 2-month and up to the 30-year bond yields here, we can see all yields going up. Now, what really caught my eye this morning and a bit yesterday was that we now see we have the 20-year bond up here, the yield here, but then we have the 3-year, the 5-year, and the 7-year yield above the 30-year. Now, normally it is, as you might know, in a way that if you tie your money up for 30 years, you want a higher risk premium on your money. You want a higher interest rate on a 30-year than on a 3-year bond. So the fact that we can see the 3-year yield here is quite a lot above actually the 30-year tells us that some very big players in the market are very nervous about the time to come, the next 2, 3, 4 years. So they want a risk premium, an extra risk premium for tying up their money in 3 years, and the money is coming out of the bonds in 3 years, and then what? So that is some very interesting things to look at here. Now, we haven't seen the shorter term yields going above here, so it's not very likely that a potential recession could come right now. But this indicates that some of the big players in the market are nervous that it might be here in, let's say, 1 to 2 years. But we'll have to see about that. We are, of course, following our models, and what are our models showing? Well, if we are starting with our weekly momentum stock strategy here, we can see that it has bounced up very nicely from the bottom here around that's about a month ago, the 25th of February. You can see the dates and the strategy performance up here. You can see we were at just around 100,000 there. And now, a month later, we are at almost 110. So this model has made just about 10% in the last month, which is great. We can see it down here. Now, it doesn't say 10% anywhere, but that is because it was a lot further down in February, and then it really shot up the last days of February, and now we are in the positive for March. So that is very nice here. And I know we still have an annual year-to-date at minus 15.8, but it doesn't mean too much, because when we're looking at the historic performance here, we can see that it quite often takes, for instance, a 17% up, 10.5% up, and so on in a month, 2 times 6% here. So it can easily regain 15%. But of course, it is a bit nerve-wracking to see a performance like this. Let's have a look at the monthly strategy, which has also performed quite well. As you can see here, it turned a bit later. It had its bottom here the 14 days ago, 2 weeks ago, kind of here at 100,500. And now we are at about 110 as well. So also a 10% gain in just about 2 weeks here. So we are at a year to date at 10.7 here, and you can see some very good performance here, and it wouldn't take more than a couple of very good green months, then we might be back in the green here. That is what I really like about these models. They are quite predictable. Of course, they can be drawdowns, but we have seen them work now in our back testing for 20 years or so, and we have seen them work with live money for quite a while as well. So that is very comforting, and it's never nice to be in the red, but as you have heard in my videos, I've been very confident that we would climb back. All right, the quarterly momentum, the one that I actually like the best because of their less trading cost, and we're giving the stocks room to move. And you can see here over the last 2-3 weeks, we were down at about 102,400 here, and now we are at 109. So also some very nice gains in the quarterly momentum here. Not as quick, but that makes sense because we are at the end of a quarter, and the stocks we have in the quarterly momentum strategy right now were bought back here. Well, there was some risk on, risk off, but it is a couple of months since we went into them, and that was based on some momentum back in time. So now we are reallocating here on Friday just with the new momentum numbers, so I suspect the next couple of months will be very nice for the quarterly momentum as well. All right, we have a couple of other strategies. We have the ETF strategy here, and we can see that one also bottomed out here at a 90,000 here. That is because it is going back from April here. As you can see, 90,000, and now it is up in 96, so also a very nice gain in the ETF strategy. And as we can see here, it has not yet had a green month this year, but we are close, and it might come here in March, otherwise we might see it in April. The last strategy is the Ultimate Dual Momentum. Looking at that one here, still a year to date here. It hasn't really bottomed out yet, not as with the others. So that is a bit interesting to see if that will bottom out soon. I suspect it will, but that is one of the strategies, our latest developments based on the normal dual momentum, but with a bit of optimized parameters in there. So it will be interesting to see, but right now our normal models are outperforming at least this month. That's all for today. I hope it gave you a bit to think of here and a bit of inspiration, and I'll talk to you again shortly. Bye for now.